In the US, if you look at the self-storage industry as a whole, 70% of all the properties across the country are run by mom and pop operators. In New Brunswick, we bought billboards, we did TV commercials, we also did our integrated marketing campaigns that involved the mailers. There were a lot of buzz around what we did, and we obviously didn't look like we're Canadians from New Brunswick. They would just call us the Chinese couple that's buying up everything in New Brunswick. We found out that self-storage was the only asset type that never had a negative quarter. It's extremely recession resistant. And we found out that these REITs have been outperforming the S&P 500 and Vanguard real estate ETFs over the past 20 years. Working with my wife has been very fruitful. She's usually the one that's, drawing the investors in, and I'm the one nerding out with them. It's all thanks to her impressive emotional intelligence. That's the reason why we still haven't killed each other yet. We're able to create the best product market fit. That's what's really securing us and making sure that this project is going to be successful because we study the market. We know that this market needs this type of unit mix. We're going to deliver exactly to that. And that's something that you simply can't do with value add.
Hello, welcome to the Fundication Show. I'm Julie Tallman, and I'm here with Christian Sadler.
Hey, everybody.
We'd like to welcome Martin Mei with Mei Investment Group.
Thank you.
Thank you for being here. Martin is our newest pre-approved sponsor with PREIshare, and we'll be going into a little bit about that. First, would you mind telling our viewership just a little bit about what the application process was like for you?
No, Julie, thank you for asking. So I thought the application process was very straightforward. You guys did a lot of due diligence on my portfolio of what we did before, the team that we have put together, and also the type of projects we have. So I definitely appreciated due diligence, and I felt like it was very smooth. Brady was there answering any questions I have, and Christian was also there, ready and available. And I still remember our first call. You guys were just grilling me on the questions regarding how we select our sites, how we select our projects. But we felt like it's great because you guys work with a lot of accredited investors, and you guys are doing the due diligence for them, right? So I definitely value the due diligence that you guys have put in. But overall, even though it was, there was a lot of information I had to share, but it was super straightforward. It was very smooth.
Well, the interesting thing is it might have felt like grilling to you, but I think both Brady and I were just excited about what you were doing. The space that you're stepping into, it's very attractive to us. We see the potential with self-storage, and to hear your story is amazing. So I look forward to getting into that.
Absolutely, yeah.
Can you tell us a little bit about your understanding of PREIshare, and then we can kind of fill in the gaps and go from there?
For sure. Yeah, no, I think you guys are definitely filling the gaps, but my understanding, the reason why we're super excited to be here is I think that PREIshare is going to be a very innovative solution to revolutionize the entire private offering industry. I think the fact that you guys are able to fractionalize the shares for each investors into an offering, that gives the investors a lot of liquidity and also flexibility for them to come in or out of the offering beyond just the whole period that the sponsor has. But also for the sponsor, I think it's a very attractive solution too, to be partnered up with you guys, because you guys have the top-up service. You guys are also will be able to come in with your own fund. It seems like the vision that you have, it resonates with a lot of the sponsors out there. So I think what you guys are doing is really exciting. I've shared this with a couple of my other friends who are in the space, but they almost couldn't believe it. They were like, how does it work exactly? So I'm excited to get to know it more. My teammate Gabriel is also jumping on calls with you guys to understand PREIshare a little bit more.
Yeah. Well, the interesting thing about it is, when you're buying into or investing into a syndicated transaction, what people think they're investing in is real estate, but what they're really investing in is ownership into a company, right? Which in and of itself is a security. It just may be an unregistered security. So that's always been able to be transferred. It's just oftentimes been written into the agreements that it's not an easy process. So our goal really is to simplify and make that more of a standard where it is easier to sell those fractional shares and becomes more liquid of a marketplace in the real estate world.
Yeah, no, I think that makes sense. I think that will make, especially like everyday investors, that will make it really attractive for them, because a lot of times, emergencies might happen, life happens, right? They might be signed up for, a 5-year deal, but something were to happen, they want liquidity right away. This could be a really good solution for them.
Yeah.
I've found that a lot of our sponsors are most excited about the liquidity portion. Once they're approved, it's kind of like, oh, I do have the availability to offer that liquidity to my investors. So what is there anything that you're most excited about right now?
I think for now, the most exciting part is I will be able to go back to some of the investors that were having that concern and tell them, hey, here's a potential solution for you. And check out, this platform, check out the other opportunities that they have. I think I'm just excited to tell people that don't know about PREIshare to tell them to check you guys out.
Yeah, that's great.
Yeah.
Well, I would love for our audience to get to know you a little bit more so they understand kind of where you're coming from. Can you just kind of start at the beginning, how you even got into real estate, where you started, and give us the short form version, and then we can, bring in some of the details?
Absolutely. So short form version, essentially how I started in real estate was I was working full time. I was based in Montreal, Canada before. And instead of buying, a condo like anyone would in their early 20s or mid 20s, starting to earn, a bit of money, I was, reading this book, Rich Dad, Poor Dad, and got to understand, hey, to consider buying an asset, not a liability. So my first property that I ever bought with my full-time income was a duplex. It's an up and down duplex built in the 1950s. It was really run down. And honestly, I definitely didn't know what I was doing. So what I did to make it cash flow was I rented out room per room, and I even closed off the 2 living rooms into additional bedrooms. But because of that, my mom and we got to live for free. She will occupy one room, I will occupy another room, and all of the rest of the property was rented out. So it was, definitely, it meant a lot to us as immigrants because we're new to the country, and we were always felt like we didn't really have any power. We always felt like we didn't necessarily have a presence in this new country. So owning that piece of real estate and being able to live rent-free, mortgage-free was very powerful for us. But that's also where, I got to deal with contractors, deal with tenants, and living with tenants, first-time basis. So from there on, that's actually how I also met my wife through one of the tenants. One of the tenants decided to throw a party, and my wife came to that party. That's literally how we met. We met in the backyard. From there on, part of the journey that was very instrumental was the fact that Lynn moved away to this part of the country called New Brunswick. It's a province in Canada. At the time, I didn't know it would be a great real estate market. I just knew, hey, this girl that I'm really into just moved away. I should probably go visit. So during my visit, we were looking for an apartment for her to rent. And we realized, hey, the price that you can, the rental price that you can get in this part of town, in this part of Canada, it's actually very comparable to the major cities, to the primary markets in Canada. So we're talking, you can get the same rent in New Brunswick compared to if you own the property in Montreal, but the purchase price of the property, it's a fraction of the cost. So I was like, wait, this doesn't make any sense. I basically told Lynn, I was like, hey, please don't rent anything. This makes no sense. Let's just partner up and we buy something together. She said, what are you talking about? We only been together for like 2 months, 3 months, right? But that's what we ended up doing. We saw that there's a demand for better improved housing units at an affordable price. We were essentially applying, our big city standards into this part of Canada that's a bit smaller, that's considered a tertiary market. And what we did over the next year and a half was we actually built a company around that. We learned how to negotiate directly with the sellers. We learned how to source these distressed property owners and talk to them and try to come up with a win-win situation with them. So we built a 38-unit multifamily portfolio. We also wholesaled a bunch of properties. We wholesaled over 60, 70 different transactions to other savvy investors. We also flipped a few. We did some short-term rentals. From there on, we realized the more we scaled, the more we actually don't necessarily enjoy the tenant piece, right? So we were looking at different ways that we can further scale up our portfolio, provide great returns for our passive investors, but at the same time, alleviate the headaches for us in terms of scaling. So that's how we came across self-storage about a year and a half ago, and that's what we've been working on ever since. I know you're supposed to give a short form answer, but
no, that was great, and you hit on so many different aspects. So I think we'll touch on a bunch of them. And you started off with talking about the fact that this real estate was so important to you because you were an immigrant and you were able to provide for your mother and yourself Let's dive into that a little bit, because both yourself and your wife are immigrants, right? And you guys immigrated to Canada and then now here in the United States. Let's talk a little bit about, where you came from and any benefits that maybe have lent you or challenges.
Thank you for asking that, Christian. I'm from China. I was born and raised in Beijing, China. My wife is from Algeria, Algiers. So I think for the both of us, the reason we're able to be here today, partially it's really just our immigrant mentality. The fact that we're extremely resourceful, the fact that we're very much go-getters, we're willing to go the distance, do whatever it takes to get things done. I think that was a huge a part of our success so far. But also at the same time, I think we're just willing to pack up and leave, right? When we saw the opportunity in New Brunswick, as I said, we're living in Montreal at the time. We just decided to fully move our lives away from Montreal and just fully dive into the New Brunswick market, because we realized there's not a whole lot of operators there, and we realized it's a fantastic real estate market for us to tap into, to become boots on the ground. And same thing with Nevada. Right now we live in Las Vegas, Nevada. The fact that we can just pack up and leave, I think not a lot of local Americans or Canadians will have the courage to do that. But I think the fact that we're immigrants, we see that we're very clear on our goals, and we just aggressively go after it.
Yeah. I've watched your social media, and I would say to anybody that is interested in real estate but hesitant to get into it, to watch your content, because you dove in and you moved so quickly from that first property to wholesaling, and then what's next. And so, I would say if anybody's interested in just how do you take those first steps, you've done that really beautifully. How long have you been in real estate now?
From the point that I bought my first property, it was around 2019. So it's been around 4 years.
Yep.
Yep.
Congratulations.
Thank you. Yeah, no, it's been a wild ride.
Well, and what you were able to do in such a short amount of time is fantastic. And I think going back into your, beginning where you moved to New Brunswick, is it New Brunswick?
Yeah, you got it.
And you guys essentially became celebrities of that town, if you will, as investors. And that came with some positive and some negative you shared with me. Let's break that down a little bit. What can you expect if you step into a smaller market and you really become the outlier that is doing majority of the real estate in that area? What are some of the positive and negatives of that?
So, that's a very intriguing question. What was interesting about that market was the fact that, I would usually compare it to Ohio. If I have to compare another state in the US, it's extremely landlord friendly. The tenancy laws, they're more favorable for the landlords. The cash flow potential is a lot better. And also, I will say the cap rate you can get, it's also a lot better. But at the same time, what that means for us as, boots on the ground and trying to create a wholesaling company was the fact that, hey, nobody is going to buy a single family or a little duplex in New Brunswick or Ohio, right? If they're going all the way out of the province to invest in a smaller market for cash flow, they want more units, the merrier, right? So that created a challenge for us, because that means we're going to have to reach out to these multifamily owners and trying to convince them to sell to us directly. So we couldn't just, do what wholesalers usually do. We can't really do bend designs. We can't necessarily just, send out junk mails. What we did was what we call a sniper approach, right? So we will actually look up based on the zoning map of the city, and we'll find out, which area was R3 zoned. So look for these multifamily zoned properties, and we'll skip trace the actual property owner. So if they live in Toronto, but they own a property in New Brunswick, we'll send them a letter all the way to Toronto to make sure that, they understand we're in it to buy their 12-unit buildings. So through that process, imagine if you get a random mail and it has your name on it, and the letter says, hey, I know you own this property, if you're looking to sell. If you happen to be in a position where you're looking for a quick sell, it might work out great for both of us. But if you're just randomly getting that, open the letter and you see your full name on there, you might be freaking out, right? So because of that, I think nobody else has really done that before in that part of the country. Even in Canada, nobody really goes all the distance to find the actual owner's information because of the privacy rules in Canada. Essentially that information is not really easily attainable. So because of that, in New Brunswick, we bought billboards, we did TV commercials, we also did our integrated marketing campaigns that involved the mailers. There were a lot of buzz around what we did, and we obviously didn't look like we're Canadians from New Brunswick. They would just call us the Chinese couple that's buying up everything in New Brunswick. So that created a lot of stress. That created a lot of headlines, right? Especially the Canadian government. They like to protect the tenants. They're always trying to shed bad lights on the investors. The U.S. is extremely entrepreneurial friendly, but not really the same case in Canada. So how we dealt with that was, first of all, I think any press is good press. The fact that people know of us, that means we're doing something right, and that we were able to communicate our value proposition effectively. There were a lot of sellers that were able to help out throughout the way that were in a really tough spot. It was also during COVID, so we were able to help them out, buy their properties on their terms, provide them a reasonable offer. That's a win-win situation for everyone. But for the sellers who might have been really pissed off about our approach, we simply tell them, hey, if you don't want to work with us, that's fine. If you're looking for a top dollar, here's a real estate agent's phone number. If you're looking for the top price, don't sell it to us. We're not your answer. If you're in a tough spot, feel free to give us a call, right? But yeah, that's how we handled it. But because of that, I think our investors also really trusted us because of just the exposure we're willing to take on and the access to information, the access to deals that we were able to have.
Yeah, that's great. And you got recognized when you were around town, right?
Yeah.
Tell some of those stories.
Yeah, well, I mean, some of them would be like, hey, you guys are the Chinese couple that's buying up everything in New Brunswick. Or some of them would be like, hey, you're the fucker that's buying up property so nobody can afford it anymore. We usually tell them, hey, if anything, we're bringing the prices down because we're offering win-win situations, and we're not offering the top dollars. We're not overbidding. We're not just giving $200,000 over the listing price just to get it done. No, we're investors, so we are negotiating better terms. And no, we're not really the reason you can't afford a house. it's a seller's market. That's why you can't afford a house right now.
Yeah, misinterpretation comes in a lot when you're in the limelight, so to speak.
Yeah, and that's honestly part of the reason we decided to go into these other asset types that's not residential as well. Because even when it came to us managing the tenants, either delivering eviction notices for tenants who are not paying, we're dealing with just that example I just gave you. People are saying, hey, you're buying up all the properties, and that's why I can't afford a home. Even though I know that's not true, but it resonates deep with me. I feel like I don't want them to think that we're the problem. So that's part of the reason why we decided to go into something that doesn't involve humans living, right? Mm-hmm. We can take care of people's belongings, but we don't necessarily want to manage people's homes anymore. That was one of the motivations why we go into self-storage as well.
Gotcha. What about self-storage intrigued you in the beginning, other than that?
Yeah. As an investment, what was really interesting, I told you guys about how I would reach out to these property owners in multifamily. I will look them up. I will find out who owns them. I will do some basic research, and then I'll send them a letter, right? I did the same thing for self-storage in Canada. And I found out most of the properties in Eastern Canada, they were actually already owned by REITs and bigger companies. Whereas in the US, it's actually the opposite. In the US, if you look at the self-storage industry as a whole, 70% of all the properties across the country are run by mom and pop operators. So that means it's extremely fragmented. So I saw there's a massive opportunity for a mid-sized company to come in to create a product that these REITs and institutions want to purchase and manage. And therefore that presents a really intriguing exit potential because you're able to sell it to an institution as a private equity play. So that was one thing that I definitely didn't have access to in Canada or in the multifamily sector. So that was one thing that really attracted me into this industry. But at the same time, the scalability, right? I actually made a post about this yesterday on my Facebook. The fact that we're building this self-storage facility in El Paso, Texas. It's going to be around 753 units. That we have. If you simply increase the rent by $10, that's less than 4% of how much we're planning to charge across the facility. So increase the rent by $10, but across 753 units. I did the math. That translates to, at a 5.5% cap, translates to over $1.6 million increase in value in your bottom line.
And you don't get a lot of slack for it.
That's right. And people, it's a 4% increase, and people are not going to move out because of that. People are not going to freak out because of that either. So.
Yeah, you definitely deal with that a lot different when there's a ton of competition. So like in the multifamily space, for example, you're always having to think of a different amenity that you need to provide in addition to your pricing, right? And so you don't really have that in what you're doing. Now, what you guys are doing though is unique because you are offering kind of the best of the best of, the self-storage space. So let's talk a little bit about your business model.
Absolutely. So what we're going after, we actually structured this into 2 phases of our company. The first phase is going to be focused on ground out development. So that's what we consider to be a growth strategy. But the second phase is called an income strategy, right? So that's where it's going to be more focused on value add properties. That's going to be catered to investors or passive investors who might want to be able to cash flow from day one. Whereas the ground up strategy, the growth strategy, that's where we're going to create the most equity, but there's no cash flow until the property actually breaks even and stabilizes, right? So the reason why we're structuring it this way is that where we see the growth strategy, it's the team that we have right now. We decided to partner up with, they're called Legacy Developers. They're a group out of New Jersey, as well as S3 Partners. There's a group out of Denver, Colorado. So these 2 groups, they're led by Joe, Brian, and Barry Sherman. Barry Sherman has over 25 years of experience in the self-storage industry. He's a professional development consultant. He's been doing this for REITs such as CubeSmart and creating these massive self-storage facilities. So we decided to bring him on as one of the GPs because we realized right now in the value add game, it's extremely competitive. A lot of people are getting into the space, and it's extremely saturated. Whereas the ground up space, we just gotta find land that works, right? So we're leveraging Legacy's team to find these opportunities for raw land. We have a very stringent land criteria in terms of what kind of land we want to take on. I'll get into that a little bit later in the pitch. So we realized that the team that we have right now, it's best suited for the ground up strategy, and that's why we're focusing on that only. And what we're planning to do when it comes to property management is we're actually leveraging CubeSmart as our property manager. The reason we want to do that is because they already have the brand equity, they already have the marketing infrastructure. We just want to leverage what they already have and build out, the lease up process for us and bring it all the way to stabilization. They provide so much value for an emerging operator in the self-storage space. So why, my philosophy is why do you reinvent the wheel when you can just leverage someone else, right?
Yeah, there's a good book out there called Who Not How. I look at what you guys are doing and I think you guys take that to a really great level of so many people want to do it on their own. They want to grow it on their own. They want to have their, their own proprietary way of doing things. And I think that one thing, and I don't know if this comes from your immigrant background or something else, but you think on a global scale, you're willing to move to Vegas like you talked about. You're willing to reach out to people in Texas or Colorado or wherever else that it is. And so you're really grabbing all of these different resources and then combining them into one strategy.
That's a really solid analysis of literally our strength, I would say. It's who, not how, but also blue ocean strategy. Those are the 2 strategies we absolutely deploy. The blue ocean strategy, that's very in line with the whole self-storage strategy. Self-storage, how you look for land, it's purely based on, saturation and rates, right? So you don't want to build in an area that's already flooded with self-storage supply. So that's how we look at things as well. We look for, hey, does this market need more, temperature control units? But, even if you look at it from a macro level, how we look at, self-storage as a whole is, hey, which market is still extremely fragmented and which market doesn't really have a whole lot of big players yet. So we're actually, part of this self-storage association in Asia, because we realized that, all these massive REITs from America, like Public Storage, Janus International, they're very involved already in the Asia Pacific market as well as the Middle East market. And that's very much because there's literally very little education out there. People don't even know what it is yet. But if you look at population density, median household income, and if you look at, the size of, the kind of homes that people live in, Asia Pacific market just makes so much more sense, right? So that's part of our long-term vision as well. And that's what we see being the ultimate blue ocean strategy, because there's absolutely no big players yet that's playing in the Asian market, and there's very little self-storage supply. But yeah, who, now, how, and blue ocean strategy, absolutely. Those are the two biggest philosophies.
With your two different phases that you're rolling out, so two questions, what kind of time frame are you looking at for phase 1, phase 2? And then tell us a little bit about your current team that you said is perfectly suited to run into phase 1.
Yeah, thank you. So for the legacy developers, the reason we partner up with them is, first of all, they have an in-house acquisition team. And they have what's called a CFA, Certified Field Agents. So what's really cool about their program, and also the way they have it set up, they essentially have a team of internal people, but also external people that's constantly screening CoStar, CREXI, on market, off market, for land opportunities that check the buy box for them every single day, right? I think last time I talked to them, they were telling me they're able to screen around 2,000 lots per week. And that's like the volume they're going after. So I'm essentially leveraging their team to find line opportunities for our entire sponsor group. And when it comes to Barry Sherman and his expertise in development, that's where we wanted to bring him on as the GP to really make sure that, hey, we can get the entitlement that we want, we can get a building permit, we can have access to the best possible contractors, and fully leverage his experience on that. Now, internally, we have put together a team. It's more than just me and my wife nowadays. We decided to bring in Gabriel Aresh, and he was actually a CPA at KPMG for 8 years. So we absolutely love, just whenever, you can probably tell so far, like I'm extremely energetic. I love to share these big ideas. I'll share the vision, and he would just come crash me down. He would just tell me, hey, like, he's very conservative. He would bring in with the CPA mindset, and he would tell me, hey, like, have you considered this? Have you considered these risks? So it's a really good yin yang. It's a really good balance between, how we work. And he actually also used to serve on the Quebec Securities Board. So it will be the provincial version of the SEC in the US. And he will used to serve on that board for about 5 or 8 years. So we decided to bring him on to help us on the compliance side, because our vision is to bring this into a private equity play. If we want to play at the institution, we can't do this alone, right? And another strategic partner that we have brought on, his name is Roderick Moy. He was a really good friend of mine from business school. He was the finance guy, I was the marketing guy. He currently works in corporate finance and strategy for the Hudson Bay Company, which is the company that owns Saks Fifth Avenue, and they're actually the oldest retailer in the continent. So I really think we have this unique team put together, and we are essentially set up for growth.
Now, I know that oftentimes people don't want to go out there and hire these outside experts because they have to share in the pie. What's your strategy on that, and what's your thoughts? I mean, how much are you giving up in order to bring on these other players?
Yeah, no, that's a fantastic question. I think the answer to that is I don't have kids. So I can literally live, on a very small budget. So I'm not in it to make bank, from my first couple of deals. I'm in it to create these meaningful relationships so I can leverage them, so I can create value for everyone that's involved. So our investors can make money, our GPs are happy. I almost want my GPs to feel like they're taking advantage of me. That's how I work, right? So I want everyone to feel like they're getting more than enough value out of the partnership with me. And I'm just the one driving that vehicle, right? So as of right now, we are very generous with how we split up with legacy developers and Barry Sherman with 3 partners, even our internal team. We're all equal shareholders within our internal team because I want everyone to treat this as if it's their baby, right? My wife and I, we work on this full time. We've been working on this full time for the past almost 4 years now. Yeah, exactly. But as I said before, we were doing multifamily, so we had that income coming in. We had a lot of short-term income coming from the flips, from the wholesales. But over the past year and a half, we fully just, cut it cold turkey. We're fully focused on self-storage. So I don't expect, other people to take that amount of risk, like Roderick or Gabriel, to do that with me. But I want them to know that this is how I consider them, right? I consider them as equal partners, and I expect them to put in the weight whenever need be. but I'm the one that's taking all the risk. I'm the one that's going above and beyond for my partners and also for my limited partners.
Well, I love that because many people are so focused on one form of capital, which is monetary, right? And what I see that you're doing is you're building these other forms of capital that are so much more important, like the relationship capital, which is what you're talking about, the experience capital that you're going to be gaining over this. And so I love the long-term vision of it because I'm sure the ultimate, goal is to make a ton of money, but in the process, you want to make a lot of other people money.
That's it. And I think that's why, these partners, even though they're like, I think Barry is literally 30 years older than me, but he would pick up my phone call whenever I call him because he knows he's, probably getting a really good deal working with us. But he loves us. He loves that we're young, we're driven, we're hungry, we're willing to go the distance, right? Just to get it done. So I think we have a really good team here and that they fully understand our vision.
Yeah, I see that with our CEO, Mike, is, he's in his older years, let's call it. He's already retired a couple of times. So he doesn't necessarily want to have to be driving the business long term. So he's looking at those of us who are maybe younger in age and excited to drive something long term, because really PREIshare is the legacy that he is leaving to the industry.
That's exactly it. Yeah, no, I definitely see a lot of parallels. We were just talking about this, right? You guys have created this beautiful studio, but you guys have been working on this for the past year and a half. It's amazing how much you guys were able to accomplish. But you're also bootstrapping, right? You're starting out this new concept. You're trying to be a disruptor, right? So at the beginning stages, you're gonna have to make some sacrifices, right?
Absolutely.
Thank you for watching. Are you a syndicator and you want to be featured on the show? Become one of our 50 approved sponsors with PREIshare. Just go to PREIshare.com/sponsors.
Martin, you work with your wife, Lynn, and you've done this with her basically since the very beginning that you met. I understand that you guys met at a party?
Yeah, we met at a party that my tenant threw when we're still house hacking. Yeah.
And do you still have this property? Does this have sentimental value to you? How long will you hold on to that property?
Oh man, it's a bit embarrassing. I feel like we're investors, we're operators. We usually like to be rational, right, about these decisions. It's a duplex. It's worth about $900,000. We're $1 million now. I can easily sell that, right, and have a lot of equity. But it does have sentiment value. I do believe in Montreal as a market as well. But working with my wife has been very fruitful. She is, although very young, but she's a lot more impressive than me, honestly. People usually like her a lot more. She's usually the one that's drawing the investors in, and I'm the one nerding out with them. That's usually our dynamic. But she's very impressive, and she's also extremely emotionally intelligent too. So she's the one that's really focused on, hey, family time after 6 p.m. or after. I keep on pushing it back, but she originally booked it for like 5:30. She's like, hey, after that, no screens, family time. We have to draw the difference between our work relationship and our love relationship. So she was the one that first, literally taught me that. She was also the one that taught me that, in a relationship, you can't really expect someone to be almost like a replica of you. That's not fair. And, she has her own ways of working. We're just looking for different ways that, for us to work together. But she's always the one that's suggesting different solutions and telling us to experiment with different things. So it's been quite a journey to work with her, but it's all thanks to her just very impressive emotional intelligence, and that's the reason why we still haven't killed each other yet, right?
I was just going to ask you, what qualities do you both possess in order to work with each other? I've worked with my husband in the past, and we had friends that looked at each other and went, not a chance, so what is it that keeps it going when you guys are at odds? How do you get through that working together? Because I know there are a lot of people that work as a family in real estate.
Yeah, so I will say me and my wife, we actually did a personality test together, and then guess what? We ended up with exactly the same profile. So what that means for us is if she was here right now, we were both like going like this every chance we get, right? So what that means for her, how it's been working, it's because she's extremely supportive. I'm the one that always comes up with these insane ideas that solve these market opportunities. I will explain it to her, and she won't just be like, oh, that's really great, sweetie. She will be like, hell yeah, let's do it. That's amazing. That's so cool. And she fully gets it because she's obviously deep in the thick of things with me. So that's extremely important for me as an entrepreneur because I know that my wife is ride or die with me. She's been through the lows, she's been through the highs, and right now we're creating a new baby together, right? We're creating this self-storage venture after our successful multifamily venture. So I think that's probably the strongest glue that we have, and that, honestly, that was what I saw in her even the first time that we met in Montreal in the backyard of my property. She was really intrigued, and we talked about real estate literally the first time we met. She was telling me how her dad was a developer back in Algeria. Her dad, she always lived in different flips. And she was like, hey, do you want to show me the basement that you're renovating so I can give you some ideas? I was like, who is this girl? That's this is so random. All the other girls there, talking about different drinking games or whatever. And this girl actually wanted to check out, the basement, trying to show me a couple ideas that she had for renovation. So, from that day on, I just knew she was different. So.
That's so fun. It was definitely meant to be, and it's fun to watch you two work together. Yeah. So congrats on that for being able to do it, and for doing it probably doesn't feel like work since you get to work together.
Yeah, no, exactly. And obviously we have, when we're good, we're really, really good. When we disagree, it's like the World War III, right? Because we're so emotionally driven by this and we're so invested into this. So we're still a work in progress. Absolutely nothing is perfect, but it's really all thanks to her emotional intelligence, her patience, and her supportiveness.
Well, and I've watched a lot of couples that work together, and it seems like it doesn't necessarily have to do with, whether they are opposing or the same. It's much more of whether they're willing to grow together. I'm curious, what are the things that you guys do to grow together, both professionally and otherwise?
Masterminds. Whenever we join masterminds, it's just the two of us. And she goes to every single event that I go to. The only reason she's not here is because her sister is about to give birth any second now. So literally by the time this video goes live, we're gonna have a little nephew, but that's the only reason, this is one of the only trips that she's not with me. So the fact that, we're getting the same kind of influence, we're getting ourselves into the same network of people. I think that's why we're just constantly on the same page about, our growth, about our vision, about the ideas that we have. It's honestly such a blessing to be able to just bounce your ideas with your best friend, with your life partner, and they fully get it, and you can continue to grow on that. That's really why.
Well, that's really inspiring. And now let's get back into the business side of things, and let's talk about, a lot of people that step into any aspect of real estate will usually, kind of start at the small scale and then work their way up. They want to gain some experience. You're diving right in. You're going from never doing a self-storage facility, from what I understand anyways, to a 700 unit plus ground up development. Talk about the strategy and the idea there. Help those that would potentially want to, lend their money to you or invest their money with you. What's the theory behind that?
Yeah, it was very much by design. And the fact that we didn't just start out by doing value add, it's fully by design. First of all, it's really the people that we surrounded ourselves with. I briefly touched on that, but with legacy team with 3 partners, we give them the GP shares to do the deal with us, right? So that's why we're very equipped. We're leveraging their experience in construction and in self-storage to make sure this project is a success. But at the same time, the reason we're in this is when you're building from the ground up, you are leveraging feasibility study consultants. You're leveraging, working with the city, you're working with the engineers, you're working with the architect. All of these people are checking out the site. They're trying to poke holes in your project, right? There's so many development projects that wouldn't go through till the end because, they might realize saturation is the issue, wetlands is the issue, or, maybe even the underwriting is wrong. So how I see it is when you're building brand new, when you're building this self-storage project, because the bank requires you to have all these due diligence items to be completed, you are essentially having your project to be checked by all of these professionals with their own unique perspectives. So that's how you actually make the project a lot more bulletproof. But as the product itself, by building brand new, we're leveraging our feasibility study. We read through it. It's like 87-page document. We found out, hey, this market actually needs more climate control units, and it needs more, smaller size unit, 5x5s and 5x10s. So what we started to do is we're able to create the best product market fit. if you check out the existing supply that's in that market right now, you're going to see that's not necessarily what the market needs right now. So by building brand new, this is really the only opportunity for us to be actually create something that this market desperately needs. And that's what's really securing us and making sure that this project is going to be successful, because we study the market. We know that this market needs this type of unit mix. We're going to deliver exactly to that. And that's something that you simply can't do with value add. And that's why we decide to employ this strategy by building from the ground up.
Now, the other players in that space, a lot of them are big institutions and REITs. Is it scary going up against those guys?
So we actually are partnering up with them, right? So we are partnering up with CubeSmart, which is one of the major REITs. What's really interesting about these REITs, they're looking for market consolidation. So if you have a really good site and they happen to be in that market as well, they actually want to buy the facility from you, and they also want to manage a facility for you. So what we see here is almost avoiding the market, and the fact that these REITs are looking for market consolidation, but they're not necessarily building themselves, right? They're just looking for a stabilized asset that they can purchase and further improve, put their branding on it, and get it. So if you go on Marcus and Millichap, or you go on these listing websites and you look up these Class A facilities, you're gonna see they're all branded, Public Storage, CubeSmart. It just means they're the property managers, right? So that's why we're not necessarily intimidated. We really see this being a very exciting opportunity for us and also for the investors, because that's ultimately our exit plan. And when we look at them as potential buyers, we found out that self-storage was the only asset type that never had a negative quarter. It's extremely recession resistant. And we found out that these REITs have been outperforming the S&P 500 and Vanguard Real Estate ETFs over the past 20 years. So they have really consistent performance for their shareholders, for the directors that's on board as well. So we know that that's likely going to continue being the trend, especially as we're heading into in economic downturns. We see that this is a really bulletproof strategy if we align our product with what they're looking for.
I agree. And not only is storage resistant in a tough market, it actually flourishes really, really well. So how long are you looking to have that completed and going?
Yeah, it's funny you brought that up. It's a bit of a messed up concept, right? It's almost like if people, interest rates goes up, if people lose their homes, they're not going to give away their baby's pictures or their grandmother's, favorite items. They want to put them in a storage unit, right? And what's $150 to store, your beloved belongings versus, if you just lose the house and you have to downgrade to an apartment, right? So, and you're totally right. So this project that we have, the reason we love it is the fact that it's extremely undersaturated in the 4 mile radius. There's only 2 other competitors in the same area. They're both renting at 98 to 99% occupancy. Wow. Absolutely ridiculous. And so we get to serve about 60,000 people in the 4 mile radius. So right now, based on the CubeSmart's projection for the lease up velocity, and based on what BRRRR has predicted, and also based on what our feasibility study has shown, it should take about a year for the actual construction, but the lease up period, it should take anywhere from 24 to 36 months for us to be able to reach around 92% occupancy. But we are estimating this, that's how we're underwriting it, right? So we're being extremely conservative when we're underwriting it, but the actual reality, it will very much likely be shorter than that, because right now, if you live in that 4 mile radius, you can't even rent a self-storage unit.
Yeah. So are you guys already underway with entitlements?
It's fully entitled already. Wow. Yeah, we just gotta, get that building permit and go get it shovel ready. That's it.
Congrats.
Well, this is a great time to transition. Why don't we just get into all the details?
I couldn't wait. Sorry.
Let's do it.
Martin, I would love for you to step up and share your deal.
Perfect. Yeah, absolutely. Yeah, I would love to. So essentially what we're here to talk about is our El Paso, Texas self-storage opportunity. So just a couple of disclaimers. Obviously, I'm glad this is on video, on recording, but we're not here to give any financial advice. This is simply for informational overview. Essentially, just assume that I don't know what I'm talking about. Everything I say could be wrong. So, but definitely do your own due diligence. I'm super excited to share this with you along with the platform that you guys have built. So as you can see, that's what it currently looks like right now. It's just beautiful 4 acres of land of dirt. right? It's on a highly visible street on Edgemere Boulevard, but our vision is we're going to turn this entitled piece of land already into a multi-story, CubeSmart managed self-storage facility that's considered A-class. Now, just a little bit background about where we came from as a group. So we used to, as I said, be in the multifamily space. We used to turn properties that look like that into something that looked like that. So we will work with local authorities to provide improved and affordable housing options for the tenants of our Canadian market. And how we used to work with investors was really just a small joint venture and also small syndications. So for example, Thomas would be a classic investor, a busy professional with some cash, some saving powers, some borrowing power. But instead of buying a condo in Toronto or in Montreal in a major market, we partner up together to buy this little fourplex in Moncton, New Brunswick. So the purchase price, because we're able to negotiate directly with the sellers, we got it under contract for $340,000. What that means for Thomas is being the financial partner, he's coming up with all of the cash. So we need about $100,000 for the entire deal. After doing the strategic renovations that we did, we're able to, push the after repair value to be around $540,000. We'll do what's called a BRRRR, right? So this is, how most of these investors will start. We essentially do a cash out refinance, but as I said, we always want to take care of our investors first. So how we used to run these JVs is we'll pay out of the refinance, pay back to Thomas first with the $100,000 that he had, and we split the proceeds of the $60,000. So that's how we did with investors such as Thomas that wanted to get into real estate, but didn't necessarily have the time or the know-hows of how to do it. So we did that over and over again. We bought 8plexes, we bought 6plexes, we did short-term rental throughout the same model. Our investors were happy. Our sellers were happy because they were extremely easy to deal with. And if they just wanted a higher price, we simply send them away. If they want a quick and easy solution, we're the best possible solution for them in our market. And because of that, as I said, that's the TV commercial that we're on. We're featured on different podcasts. We're featured, we're with the local Chamber of Commerce. We're accredited business. We bought billboards all across the city. As I said, I study marketing, so this is like a dream come true for me. I get to play around different names, like thinking of selling. This is the sign I've been waiting for. Or unfinished projects. We buy houses as is. Because of our innovative approach and also how we treat our investors and treat our sellers, we're actually featured on Yahoo Finance as well, our whole company. So this is how we felt, right? Our investors felt like it was awesome that they get to invest passively with us without doing any of the work. We felt like it was awesome because we're able to grow our portfolio and everyone else was benefiting from the situation. However, this is what started to happen. We started to have mold issues. Our property managers are saying, hey, we can't even fix this. You're gonna have to get a mold remediation company to come in. We started to have, brand new fridges getting left in a nasty condition. We had roof leaks, and this was one of the brand new kitchens that we just finished renovating. After a month in, the tenant started a grease fire. And no fault of anyone, this could happen literally to me. I didn't know you can't pour water onto a pan that's on fire. So that's exactly what happened. We also had the police raided one of our units. We had short-term rental guests complaining about the long-term tenants we had, and vice versa. So this is actually how we felt. Linda and I, we realized we started fighting a lot more because we're just under so much stress. The more we scaled, the more units we acquired, the more issues we're gonna have to deal with. So how we see our El Paso project when it comes to self-storage, these are some of the key characteristics. So we're talking, it's a ground-up development project. It has the most upside potential, meaning that because we're positioning ourselves for institutional exit, even though we're underwriting at a 5.5% cap, we see that A-class facilities are trading anywhere from 4 to 4.6 cap. We're not underwriting that way, but we see that being a nice surprise that might come in for our investors. And it's not focused on cash flow. If you're watching this, you're trying to invest, but you're looking for cash flow, this is really not the best opportunity for you at this time. And most importantly, we don't have any kitchens to worry about. We don't have any tenants smoking in our units, and there's only one toilet that we have to worry about. So what it looks like, from a macro level, is we're essentially able to double our equity, our investors' equity in the target hold period of 5 years. That translates to around an IRR of 16.5 to 23.4%. The minimum investment, it's really $50,000 for our investors to get in. We're raising a total of $4.15 million. Now, how we structure our waterfall is we have an 8% preferred rate of return, 70-30 split, and we're also introducing a second hurdle rate at 18%. Now, I understand you guys work with a lot of accredited investors, but if they need a refresher on how the waterfall structure works, we created this nifty little graph for our investors as well. So how the capital stack is going to be paid back when we have the sale event is the principal is going to be paid back first. If you invest $100,000, your $100,000 goes back to your pocket first. Now, the first 8% is what we call the preferred rate of return. So that's 100% going to the limited partners. What that means is if the project only generates 7 or 8%, the GPs, we don't even get to enjoy any upside of the sale, right? So that's how sure we are that this project is going to be in favor of the limited partners. And from 8% to 18%, we structure 70% of every dollar. After the 8%, it's going straight to the limited partners, and 30% goes to the GPs. After 18%, that's where we raise our equity a little bit, so it's a 60-40 split. So this model incentivizes us as the GPs, as well as other co-sponsors, Barry Sherman, Joe, and Brian, to outperform the projections that we're built out for ourselves. Now, how we have this structured, our GPs, mainly investment group and also legacy developers, we are the ones actively operating the asset. We're the ones executing the business plan. We're contributing our expertise, our own capital. Linda and I, we've dumped, we've sold 2 of our properties and we actually dumped all of our money into this deal. So you better believe that we're gonna walk through glass just to get this deal done and also outperform the projections because all of our money is in this. And we also, in return, we get equity, we get fees. Now, our limited partners, that's the accredited investors, the institutions that we're talking to. Now they get to passively contribute capital. They receive pref, they receive equity, and they receive dividends, and they're protected from liabilities. If there's a tenant that slip and fall on the property, they don't have to worry about any lawsuits because they're fully shielded from all of the liability this property has. Now, the GP team that we have put together, I think it's a very unique team, and we are structured for success, we're structured for growth, and we're structured to scale. Beyond me and my wife, Gabriel used to be a CPA at KPMG. He also served on the Quebec Securities Board for 8 years, which is the Quebec equivalent of the SEC in Canada. So he's also an award-winning author, learning on the art of raising money the right way. So because of him, that's how we stay out of wearing jumpsuits. And we also get to make sure that everything we do is structured as how a private equity would. We're also working with Roderick on the fund management side. He went to school for finance. He went to what we call the Harvard of Canada. It's McGill University. So he studied finance and corporate strategy, and he's currently doing that for one of North America's largest retailers called the Hudson Bay Company. Now, when it comes to actual self-storage and construction experience, these are the 3 gentlemen that are really pulling a lot of weight. I'm in constant calls with them every single week. Joe, Brian, and Barry. Joe and Brian, they actually run a $50 million self-storage fund of their own, and they're purely focused on ground-up development. They're not even going after any value-add opportunities. They have an internal team of 10 people. All they do every single day is they look at sites and they determine if it's the right opportunity to build a self-storage facility on. Joe actually used to serve in the US Navy. He was with the construction battalion. They called them the Seabees. So he was the one that used to get deployed to Japan to build the base for the US Navy. So they literally came from a generation of builders, right? Barry has more than 25 experience in commercial development, specifically for self-storage asset types. Now, Julie, you were asking me about why we're doing development. Now, this is where it gets really interesting. So how we see the development process is all about value creation. And it gives us multiple different exit strategies and different points of exit that we can generate IRRs and great returns for our investors. So let's say if we get an offer, as soon as we have the land entitled, or as soon as we get our certificate of occupancy, these are potential exit points that we can sell to another operator that's looking to get into the space or another developer. But the same thing stays true when it comes to lease-up phase and the stabilized phase. The fact that we have different exit points, it gives us the flexibility and also gives us the ease of mind as we're navigating through the uncertain times, such as what we're going through right now. Now, what type of properties and also what type of markets are we going after? We're looking for markets that has extremely strong job growth, net positive migration, really strong storage demand. But at the same time, we're looking for rent growth because if you look at self-storage, it very much follows the trend of multifamily developments as well. So these are some of the key criteria that we look at when it comes to selecting a market. And that's what we were talking about before as well. I got to leverage Joe and Brian's team and their entire team of acquisition specialists. So this is an internal board that they use just to show you just the number of sites they have to go through just to shop for land, right? And they even have people literally drive up and down the street looking for vacant land that might be off market that will be suitable for a self-storage development. So whenever we come across the right land, that's after a month of research, a month of saying no to different opportunities that might have come across their desk. So the site that they have come across in El Paso, Texas, that's roughly where it is. It's on the east side of town. It's surrounded by brand new residential developments. That's actually the more affluent area of El Paso. If you are considering moving to El Paso, you're gonna talk to local realtors, and the local realtors are gonna tell you that's where you're actually gonna have the safer and the really nice neighborhoods that's currently getting built. We also like
sorry, real quick, do you have some deed restricted neighborhoods in that area where maybe they can't park an RV, or they can't have a shed in the back that increase your storage?
Absolutely, yeah. So we look at, HOA densities as well. Absolutely. So there's certain communities all over the country, right? Like a lot of the homes nowadays, they're built within the HOA. And that's why self-storage and boat and RV storage really flourishes. So the same thing stays true for El Paso. Our feasibility study consultant actually did a completed study on just how many homes and how many residents live in a HOA that have really strict restrictions, and how many of them live outside of a HOA. So all of that are the data that we currently have. We love this site because it's on a major road, and it's got excellent visibility and easy street access for our potential customers.
Well, what I love as you're getting through this is you've done so much research, and you come from the aspect of what did I not want in my investments? What do I want in my investments? And then how do I leverage all of these different resources to make sure that I'm looking both short-term and long-term. So it's really nice what you've done so far. And I love what you talked about of having the multiple exit strategies. That gives you the ability to kind of time the market and evaluate at every point along the way.
Yeah, and I would love to give a shout out to Spartan Investment Group as well. They're another fantastic self-storage operator. In fact, my uncle-in-law is actually, I think he's looking for a next career opportunity. I'm actually connecting them because I feel like it might be a perfect fit. But Spartan Investment Group were the one that actually taught me a lot about how they look at these opportunities, how they look at different exit strategies. So I'd love to just give them credit for that, first of all. They've been quite an inspiration in how we want to structure our company and what kind of growth we want to have.
Well, we can give a shout out to Ryan, who we've had here on the show actually with us as well.
That's right.
And we hope to have them as an approved sponsor with us. They're amazing at what they do.
Absolutely. No. And that's, a huge part of our strategy. We very much identify, the competitive advantage they have, and we're essentially trying to replicate a lot of that, but at the same time, we're having our own twist to it. Just want to give them a quick shout out because the exit strategy part, that's a huge part of their also valid proposition as well. And that's what we believe that's very true to this industry. What we found out about El Paso, Texas is actually, when it comes to, when you compare El Paso, Texas to cities of this scale, we see that it's actually among the safest large city in America. I live in Henderson, Nevada myself, so I definitely believe in this chart, and this is, one of the many sources that tell the same. We also found that El Paso actually had really steady population growth over the past couple of years as well. And the huge reason behind that is the fact that, there's a U.S. Army base there. Fort Bliss, there's a lot of active duty members, there's a lot of family members that are constantly moving into El Paso because of the Army base, but that's not the only reason El Paso is really fast growing. We also found out that El Paso, it's a fantastic city when it comes to advanced manufacturing. And in fact, it's actually one of the cities that the US government is going to have a very strong focus on to develop the advanced manufacturing sector for the country. Now, if you look at self-storage data, what we see here is the square foot per capita. That's how we determine, the actual saturation. So we see that it's 2.55 square foot per capita, and in a 3-mile radius, we get to serve 57,000 people, but there's only 2 competitors in sight.
That's incredible square foot per capita.
For Texas.
For anywhere, that's good. But
that's right.
Yeah, that's great.
And if you compare that to, that's a site in Houston, Texas that we also looked at, right? That's usually, honestly, like most of the land that we come across, it looks like the graph on the right, where you see in the 4-mile radius, in the 3-mile radius, you have about, 65,000 people. So same population density, but you have 16 other stores. You have 16 other competitors. Most of them are actually REITs. The purple ones means they're REITs. And the other colors mean they're mid-size or small-size operators. So we see that the square foot per capita for this site in Houston is 17.10, but for our own site, it's 2.55. So that's the initial sniff test that we did, right? And then we fully did a feasibility study, and we found out the 2 competitors that we have, remember the 2 competitors we have, they're sitting at a 98 to 99% occupancy. What that means for you, if you happen to live in this area, this beautiful area, you won't even be able to rent a self-storage unit because they're fully booked out. And one of the competitors, they're actually building a small expansion of around 12,000 square foot of self-storage. And that's currently with the permit process, so that's likely going to be delivered as well.
So great. You should be able to lease up really quickly.
That's exactly it.
Okay.
So what we see here is, we further did a calculation of we times the population in this area by the saturation, and that's going to give us the total demand in this market, right? We use that to subtract the total supply, and that gives us a delta of around 700,000 square foot. And remember, we're only building about 753 units. That's around 84,000 square foot that we're building. So technically, even if everyone that's watching the show is coming in and they want to build like 8 other facilities in the same market, we're still barely meeting the demand in this market. That's why that's how we select these sites, and that's how we feel safe and secure about building a self-storage facility here. And exactly to your point, we're likely going to have an even faster velocity of lease up and reach stabilization a lot faster than we thought. Now, Barry Sherman, obviously the brains of the operation. I'm just the one that's driving the vehicle, but he is really the engine, right? So Barry Sherman, based out of Colorado, but his team, S3 Partners, they have projects all across the country. He's been doing this for the past 25 years. This is a project they recently completed in New Jersey. You can see the drive-up portion, you can see the temperature control portion, and that's a ribbon cutting ceremony they just had. They also just opened up a site last month in San Antonio, Texas. Exactly the same model, exactly the same underwriting process. So I'm essentially replicating the team that they have and leveraging the resources they have for my own site in El Paso. Now, we decided to partner up with CubeSmart. And some of you might be thinking, okay, how come you're not creating your own property management team? And the reason, again, it's who, not how, it's leverage, right? So by partnering up with CubeSmart, they know how much HR costs, how much marketing costs for this market, because they currently have, I think, 7 other sites in El Paso, Texas. So they know exactly how fast it's going to lease up. So when we give them the address of our site, it took them a couple of weeks to come up with a lease up and revenue projection. They have it broken down to per month how many units are likely going to be moved in, how many units are likely expected to be moved out, and what that net operating income will look like at the end of year 3. So they actually give us a net operating income projection at year 3 of operation of just over $1.2 million. And our own underwriting, we actually did another layer of being conservative. So our actual numbers are actually going to be even lower than that. But this is essentially the same as, let's say, if you buy a little duplex, in Salt Lake City, and you're asking a local property manager, hey, how much do you think I can rent this out for? They don't want to overpromise, right? They want to underpromise and overdeliver. This is exactly the same situation here working with CubeSmart. Another huge attractive part working with a REIT as our property manager is the fact that we get to leverage our marketing budget and marketing infrastructure. If you Google self-storage near me, no matter where you are, you're not going to see Martin Mei self-storage on there. You're going to see these massive REITs that dump millions of dollars in marketing. So for SEOs, for paid ads, we get to leverage that. For the website, if you go on CubeSmart's website, you're going to see they already have everything built out for SEO purposes. It's the brand equity that the people will have, right? So that's what we decided to leverage. Our site is essentially going to be listed as one of their own sites as well, and as the other sites they manage. But by having a rental office, we also get to have complementary, supplementary revenue streams from selling moving supplies, from selling tenant insurance. But what we love the most, just looking at the self-storage industry, is the fact that we really see that the demand is extremely steady, and there's always demand no matter how the market cycles are. We see that when things are going well, people are moving to the city, people are doing renovations, and people are starting businesses. That's when people need self-storage. But during a recession, when people are getting divorced, when people are going through bankruptcy, they need self-storage even more. So we see that residential tenants, they on average stay about 16 months, and commercial tenants, they spend about 20 to 22 months on average. And this is probably one of my favorite slides because these are literally the pictures that we took with our own units. A self-storage unit, to empty that out, let's say you cut the lock, you put their stuff on storageauction.com, you have to get rid of it and get it ready again. It takes 30 minutes. You might have to Dyson it, right? You might have to bring it with the Dyson and kind of, clean it up a little bit. But for a multifamily unit, that's one of the units that we own in Canada. You're gonna find needles on the ground. You're gonna see, bonds in there. It took us 3 weeks just to empty it out. And it took us even longer to get it renovated and show the tenants, right? So that speed of turnover is probably one of the most attractive parts when it comes to managing a self-storage unit. Now, the exit strategy that we have. There's a lot of options, as I said, there are different points of exit, but how we see it, we can sell the entitled land to a developer, we can sell as CO, or we can sell as stabilization. Where we're uniquely positioned is we're positioning ourselves to be right in the middle, right? So we are positioning our portfolio and the properties that we're building into a facility that these bigger fish want to buy and want to manage. So we see a consistent track record of these, BlackRock of the world, U-Haul, CubeSmart Property Management, StorageMart are out here buying facilities left and right. The upside from the institutional buyout. We see that over the past 20 years, the private owners are selling off to the REITs, to the public companies, to the private equity groups. We see that Extra Space acquired Life Storage for $12.7 billion. Public Storage is out here buying properties after properties. Edison Properties sell Manhattan Mini Storage for $3 billion. Blackstone buys Simply Self Storage. Bill Gates is getting to self-storage. So that's what we see being one of the most exciting opportunities for us as the operator, but also for our investors. Even though we're underwriting at a 5.5% cap, but likely it's going to trade at a more compressed cap rate because we have a facility these institutions want, and they're looking for market consolidation.
Well, and I think anybody watching this can see this happen in their own market, right? I know, and it's kind of a random example, but I bought a chicken feeder from a girl, and she gave it to me out of a storage unit, and I just had to go there, punch in the code, and get the product. A few months later, I wanted one of her waterers, so I went back in there, and it had switched branding from a mom and pop brand to now Extra Space Storage. And you're seeing this, all across the country. I think you'll see these big names that just continually expand out.
That's exactly it. But the fact that we're not too big yet, we're not planning to be the next Blackstone or the next Public Storage. The fact that we're still, a mid-size operator, that's how we're trying to position ourselves. It's the fact that mom and pops or other people from outside of the industry who are trying to get into the space, they will likely be a potential buyer as well. So the fact that, we can target the big fish or the small fish, that gives us just that much more flexibility, right? We see that over the past year, if you go to self-storage events, most of the people are coming from multifamily, where they came from business owners. They just want an asset type that's a lot more predictable, a lot easier to manage. And frankly, that's how I got into it, right? I was in multifamily. But how we position ourselves is we see that by building Class A facilities, we're able to position ourselves as a mid-sized fish, so we can structure ourselves as an attractive option for these mom and pop operators who are trying to get into the space as well. So our monthly communication reporting, we're planning to have monthly updates, monthly financials, the capital payback, preferred returns, and carry interest. They're all paid at a sale, right? So that's probably the only difference you're going to see when it comes to our offering compared to a value add offering, and K1's as well. Now, how much will the property be worth? We look at the worst conservative and likely scenario. And as I said, these are just based on the projections from our feasibility study, from CubeSmart, from all of these resources. We simply just plug it back into the Excel and run our waterfall model. So this is what we saw being the likely return. So on a conservative standpoint, at a 5.5% cap, which is ultra conservative, we're looking at a valuation of $18.9 million at the end of year 3 of operation. Now, the likely scenario at a 4.5 cap, that will mean our investors are able to achieve an IRR of 24.1% on their money. And that would mean the valuation will end up being $23 million. And remember, we're only building this for around $13.7 million. Now, everything that could go wrong, right? I'm being a Canadian and also having a CPA on the team. I was basically told I have to put this in there. So the natural disasters. Now, thankfully, I'm a Canadian, so there's a reason I moved to Nevada, but not Florida. I can't even imagine having my property go through a hurricane. I'm terrified of natural disasters. Now, El Paso, Texas, it's in the desert. Nothing really happens there. We compare the earthquakes, tornadoes, hurricanes index compared to the national average and the Texas average. El Paso, Texas ranks really low when it comes to all of these natural disaster indexes. Overbuild and new competition. That's likely, one of the biggest killers in the self-storage industry is that there might be too much competition and that, it could very much be overbuilt, especially if they're coming in with cheaper capital. Now, we determined this 4-mile radius market to be fully protected from that. And as I said, in theory, if 8 other brand new facilities just like ours come in and get built, we're still barely meeting the demand. Economy crash. We saw that in the last 2008 recession, self-storage was the only asset type that didn't have a negative quarter. And again, that's why people invest in self-storage to hedge against a recession. Takes longer to lease up, not able to refinance, or let's say for some reason, REITs, they just, stop buying. They stop their market consolidation. Well, guess what? We're just going to hold on to this property as a cash flowing property that generates over $1.2 million in net operating income per year. So these are all of the things that we considered that could go wrong and our mitigation against it. So yeah, this is essentially the pitch on our project, and what's in it for you is that at the end of the day, you don't need to worry about anything. You don't even need to learn about self-storage. I like to overshare, so that's why I really shared all of the criteria, our business strategy with you guys. But at the end of the day, what it means for you is you get to spend more time with your family. You get to work on whatever that it is that you do. But it's a really great opportunity for you to double your equity in 5 years by investing into a recession-resistant asset type, that's self-storage.
So this is one of those opportunities for somebody that has capital that they want to grow. They don't want to necessarily have to spend a lot of time thinking about it or managing it or even worrying about what it's doing on a monthly basis. They would want to put that money in and then capture a larger amount and harvest later on.
That's right. Exactly.
Very cool. I think this is an amazing project, and you guys have done your research, and it's really cool to see how you're getting into this market.
I appreciate it. No, thank you so much. Yeah, no, I'm planning to go to El Paso like monthly just to check on it. And my parents as well, I got to retire them to live in one of our units in Canada, but they can't wait to go check out this project. They're saying, hey, we're going to use as a contractor. I'm like, Mom, chill. It's not a duplex renovation. These guys are, national builders, and, they got their own GCs. You don't have to read the GC for me. So yeah. They're trying to be involved in every way possible, but we're all very excited.
I'm impressed with what you've set up for the investor, as well as just, your team and your waterfall. And I think that it will execute beautifully. So congratulations.
Thank you. Thank you so much.
And for those of you who are watching, thank you for joining us for another edition of the Fundication Show. And if you want more information, reach out to Martin and he can help you.
Thanks, everybody.